Cryptotrader is proudly brought to you by Element, a full-service investment bank for the digital token capital markets.
You know, it had to happen sooner or later. We had to arrive in the city of money, Las Vegas, in the Bitcoin Lamborghini. With all the money in cryptocurrency, I wouldn't arrive here any other way but in the Bitcoin Lamborghini. But on a more serious note, we're actually here for the Money 2020 and Coin Agenda conferences, which are the premier conferences in Las Vegas covering Bitcoin and cryptocurrencies. We have 3 jam-packed days, and we're going to keep you informed every step of the way. Jim, thanks for the ride. It was an absolute pleasure being driven here in the Bitcoin Lamborghini. Why do you call it the Bitcoin Lamborghini?
We call it the Bitcoin Lamborghini because it was purchased with just Bitcoin.
It was purchased with just Bitcoin. How many Bitcoin did this Lamborghini cost?
Only 40.
So this cost you 40 Bitcoin?
That's correct.
Okay, when did you start buying Bitcoin?
I started mining Bitcoin in 2010, but I sold them too early. So I started buying back in 2013.
In 2010, what is the price of Bitcoin?
Around $1, making this about a $40 car.
Okay, so you bought Bitcoins in 2010 and you bought much more than 40. You held the Bitcoins until today, and now with a $40 investment in Bitcoin, you bought yourself the Bitcoin Lamborghini.
Sort of, because I sold my Bitcoin from 2010, and then I bought back in.
Okay, and are you still buying cryptocurrencies today?
Actually, now I make them for companies. I'm a blockchain creator.
You're a blockchain creator. You're actually creating blockchains?
Yes.
So similar to Vitalik?
Yes, before Vitalik.
Before Vitalik.
Yeah.
So you got in and started developing blockchains before Vitalik?
Correct.
Are you working on any exciting projects today?
Absolutely. I'm working on Aspire.
Aspire, what is Aspire?
Aspire is an asset solution platform that allows people to easily create their own tokens on our blockchain.
Okay. Can you do smart contracts on that blockchain?
Absolutely. You can do smart contracts. You can do everything that you could do with an Ethereum type token or counterparty, but at a much lower fee and on a much more secure blockchain.
What makes your blockchain cheaper and more secure than the Ethereum blockchain, which is actually quite well developed at the moment?
We're not taking anything away from Ethereum. We're impressed with what they've done, but there needed to be something else, something that was more secure and something that was cheaper. We're more secure by ACP checking our blockchain. We use something called advanced checkpoints to ensure that each block is from our blockchain. This prevents any 51% attacks, which is known as double spending. This also prevents anybody from coming along and hijacking our blockchain.
And is Aspire actually live today? Is it working today?
Aspire's blockchain is up and running. The platform will release in February of 2018.
Awesome. You also mentioned to me that you run a thing called Bitcoin Radio. What is Bitcoin Radio?
Bitcoin Talk Radio is a 2-year-old online radio platform that is geared just for Bitcoin and cryptocurrency enthusiasts. It runs 24/7, and if you have an Amazon Echo device, just say, Alexa, play Bitcoin Talk Radio.
And how many people actually listen to Bitcoin Radio?
We had 1 million hits in the last month.
1 million hits only talking about Bitcoin?
That is correct.
You and I are going to become great friends because we're all about Bitcoin and crypto.
Yeah, I'm glad to meet you.
And you, my
Finally.
friend. Are we in an ICO bubble? In fact, are we in a crypto bubble? Well, the answer is we're definitely in a bubble, but where we are in the bubble, no one actually knows. So what I thought I'd do is I'd get Richard Titus around because he's seen this movie before. We're at a point now where the market cap's are at about 170 billion. Do you think we're in the frenzy, in the hype, in the bubble?
It's really interesting. So in 1998, I did an interview. I don't think it's available anymore. It was for a small magazine called Silicon Alley Reporter, run by a guy named Jason Cartanis, who's gone on to very famous things. And he was talking to me and he said, we're in a bubble. And I said, look, all innovation works in sine waves. And sine waves are really important because they always go up and down, and so you really have to track the long-term trajectory, not short-term ebbs and flows. And so I feel like what's happening right now is there's the technology of blockchain, which is very, very important. It is the systemization of trust into a software contract. Very, very powerful. And the addition of smart contracts through Ethereum gave a forward-looking contractual relationship as opposed to the ledger, which is a backwards-looking relationship. And those two things together, in my mind, if healthcare is 6% of the US economy, contractual relationships, litigation, and financial measures are anywhere between 10 and 20% of the US economy. So we were talking about a technology which will impact 20% of the global economy, and that is a significant change.
So it's certainly the most exciting technology of our generation.
So my point is that 180 billion, which is my number, depends on the price of Bitcoin today. 180 billion is a drop in the bucket to the percentage of change to the $200 trillion global economy.
We've got Bitcoin, which is 100 billion of the 180 billion. Do you think that with all the progression that we've got, do you think it's still justified that Bitcoin is still 2/3 of the market share of the entire crypto market? And one other question around that is, you've got Ethereum. Ethereum has many more use cases than Bitcoin. Do you not think that Ethereum should be the one that's at $100 billion?
To me, Bitcoin is rapidly becoming the global reserve currency. It will eventually, to my opinion, replace the US dollar as a reserve currency. And if you don't know what a reserve currency is, you really should go and read the historical precedents and context of the Bretton Woods Agreement and how that pushed the US economy to be the global powerhouse that it is. Ethereum, to me, is a very different thing. It's an access token to the world of ERC20, which is the world of sort of ICOs and new businesses and investing.
Smart contracts.
Yeah, so in order to get into those companies, you need Ethereum. Those companies are built on Ethereum. So to me, Ethereum is a stage in the evolution of technology. Now, we don't know if it's HTML or Java.
Let's talk a bit about the Bitcoin discussion, a peer-to-peer electronic cash system. Bitcoin is not a peer-to-peer electronic cash system. It's got slow transactions, high transaction fees, a community that can't agree on anything, not even an agreement which they signed in New York. Where does that leave Bitcoin, and aren't there maybe better solutions for a peer-to-peer electronic cash system?
When you think about the limits of Bitcoin, many of those limits are actually the way people have implemented it. So, HTML is a phenomenal protocol, and Bitcoin is a protocol, Ethereum is a protocol. So these protocols, we're still learning how to use them, and yet there's billions of dollars moving through the system. I mean, 180 billion is a lot for a guy who looked at this a couple of years ago and said it's like 10 billion. And if you think about that number I used before of 200 trillion, I think our target goal here is 20 trillion. And so we've got a lot of headroom. And I believe that this whole ecosystem will become minimum 20% of the total global economy.
What are the 5 tokens you'd buy today? 3 years, no buying, no selling.
First of all, Bitcoin and Ether would be for sure buy and holds. I'm a big fan of EOS, which puts me, it's an interesting thing. Brock has been a friend for a long time. I spent a lot of time with the team, and I'm a big fan of what they're up to. I think that if they are successful, they will be wildly successful. There's a company called Sun Exchange, who is, full disclosure, a client. What they're doing is tokenizing the installation of solar beginning in Africa.
We know Abraham very well, and we're having Abraham on our show.
Fantastic. I'm a huge fan of this. I mean, today we're talking about an access token because that's where the market is. But I think long term they will start to issue some security tokens over time because it's one of the best ways to drive climate change improvement through tokenization. And I think there's a lot of powerful opportunities, not just around climate change, but around all kinds of businesses, of really giving the power back to a decentralized group of people closer to where a problem or a challenge is.
One last token.
I think it's probably Polkadot.
We're here in Las Vegas at the Coin Agenda conference, and the whole morning we've been seeing ICOs. People coming and pitching their ICOs so that we can decide whether or not we should invest. And to be honest, even with all my experience, this stuff is getting too much and it's going way over my head. So what I decided to do was to get you guys some industry experts, guys who run their own fund, to tell us how they make an investment decision. At the same time, I got William. William pitched Wax Token to us today. William, just an overview, what is Wax Token?
So Wax Token is a token and a platform that allows people to trade virtual items, in-game virtual items, between each other, wherever they are in the world.
So these virtual items are actually just skins. They don't enhance your game performance, they just make you look better.
Yeah, it's a great thing to point out. There are virtual items that helping you do stuff within a game. They make you more powerful, run faster, a stronger shield. Then there are what we call skins. Skins are strictly cosmetic items. They don't do anything except make you look cool. But because that's so important to people, there is a much bigger market than the actual virtual items that enhance your in-game performance.
Hold on a second. So how big is the market for people who want to look cool on games?
So skins, just cosmetic items you put on your avatar, whatever, to look cool, started about 5 years ago. That market is now globally 400 million consumers trading $50 billion worth of skins back and forth every year.
Wow, that's a huge market. And you guys are big players in the market. Your existing business is a big player in the skins market.
Yes, we created the largest marketplace in the world to facilitate buying and selling of skins.
The largest marketplace in the world. How many customers do you have on this marketplace?
Well, we're a private company, so some information we share, some we don't. I will tell you, there are millions of people on our platform who are buying and selling these digital items.
Come on, we're all friends here. I mean, we can share some secrets.
And an item that gets listed on our marketplace lasts for a very short period of time because the demand for them is so high.
The first question that comes to mind is, how is this improved by being on blockchain versus just being on a centralized database run by the game manufacturer?
Right, it's a great question. Hey, OpSkins has the world's largest marketplace, a centralized marketplace for buying and selling skins. So why would we want to move it to a blockchain-based solution? The answer is because it will enable far more people to be able to trade, buy, sell across the world. And the reason for that is the way centralized marketplaces work today is they're consignment stores. So if you give us an item, you can't put it on any other exchange anywhere in the world, which means the buyers coming are only the buyers who can actually first speak our language. We operate in 16 languages, but we sell in 100 different countries with 100 different languages. So for the most part, if you have a traditional centralized marketplace, you can't get the entire world to look at, let's say, the full global supply of inventory available. And with the blockchain, you could do that.
Can you give me, just real quickly, an example of one of these virtual assets that would be transacted? Just one.
Sure, so there's a game called PUBG, Player-Unknown Battlegrounds. It's a very popular last man standing type game. And in that, you can buy a really cool $400 trench coat that would distinguish you from most of the other people in that game, right? They're very hard to get, but in the game. But if you want to go and actually buy one, it's not so hard to get, as long as you know how to go to an exchange and purchase it. So that would be an example of what we do.
Let's talk about the ICO or the token. And Carl, I'm going to hand over to you because I know that this is your real field of speciality.
The ICO is coming up pretty soon. Could you tell us just a little bit about timelines, who's involved, how much are you raising both in crypto terms and in US dollar terms?
We've done our private pre-sale, which was oversubscribed, and we call it a token generation event, right? That's what it is as opposed to an ICO. We've done that. We brought in a lot of what you would call very sophisticated buyers, people in the crypto industry who've been in a long time, who can judge quality and I think judge platforms that look like they're actually going to succeed. So I was very satisfied with the reception we received from the most sophisticated people.
Give us some names of these most sophisticated people that you talk about.
There are many of them. Galaxy Investments, you might know them out of New York. Blockchain Partners out of Korea. Kinetic Capital out of Hong Kong. Hyperchain Capital out of Singapore.
How much are you raising and when is the sale?
So we're denominating our raise in Ethereum. So hopefully your audience is familiar with the wonders of Ethereum. They're used a lot for these token generation events. So we're raising 210,000 Ethereum, and we're breaking that between a private sale and a main sale, as is the convention for these sorts of things. We'll be doing the main sale in a short period of time at the beginning of November, and we're quite hopeful that a lot of people will look at some of the smart people who've already done this and look at my background and my colleagues' background and see how successful we've already been in this industry. And I think it's very important for anybody who's thinking of putting money to work in any industry related to blockchain, that the people building these platforms, especially for utility tokens like ours, that they know something about the industry that they're building a platform for.
So one of the things that I know about your wax token is that you're actually building your own blockchain. You're not using the Ethereum blockchain like most other guys are doing. You're getting into this whole dark world of building your own technology and your own blockchain. Why not just use an existing blockchain?
Well, it's a great question. Why not just use our own existing blockchain? Let me tell you, one thing I've learned as a venture capitalist, is running an incubator, starting investing many dozens of companies is, if you don't have to build the thing, don't. Lease it, borrow it, steal it, whatever, but don't build it. We're building a blockchain because without it, we couldn't do what needs to get done. The transaction volume that Opskins does on a daily basis would dwarf any blockchain in existence.
But what makes you believe that you can build a better blockchain?
Well, it's not necessarily a better blockchain. It's simply a blockchain tailored for the sorts of assets that our marketplace handles. It's not better, it's just different.
And what are the complexities that a normal blockchain can't handle about your items that you're selling?
Right, and there's many, and of course, if people read the white paper, they'll see some of this, but it's a great question, and it's the very question I asked my technical team when we set about to do this. Can't we use another existing blockchain? Transaction processing volume has not reached the scale potential that we need. So right away, we could not push the amount of Opskins volume to any blockchain today and have it work effectively. That's one.
Other than scale.
Right, other than scale, it's the fact that these items are unique. They're not fungible. They're not like a US dollar or an Ethereum or a Bitcoin or a Litecoin, which are generic coins, very simple to move back and forth. These are unique items, very high value, some of them in the tens of thousands of dollars. Our platform had to be tailored to facilitate trading those unique items. They're not there today. The other is we need a human element in our blockchain. Smart contracts, as much as I love them, and I do, and I think they're wonderful things, smart contracts have not evolved to the extent where artificial intelligence will drive these things such that no human needs to be involved in the process. There's things smart contracts can do today, but it's limited. So we have a hybrid solution. We use smart contracts for what we would call the settlement process, and we use humans and bots and other software for the other part of the process.
So what percentage of total wax tokens will be given to people who participate in your ICO?
About 35% of the tokens that are generated are going to go to the people who are buying them in the token generation event sale. About 30% is going to what we call broadly market development. And the thing that's important to understand, I think in any infrastructure chain like ours, there are many thousands of companies that participate in our market. It looks like there's a buyer, a seller, and maybe an escrow agent in the middle. In fact, there may be 6 or 7 people, 6 or 7 different businesses that participate in a trade. And as a result, our platform needs to facilitate payments and information back and forth from all of those. So market development is what we are calling going to many of these participants and helping them start using our platform. Some of that is through outright grants, some of that is through software development, subsidization, but we need an ecosystem to be built. Then you've got about 15% that's going to the original founders of blockchain, the ones who started the Wax token platform. Call them like the, what you call founders in a traditional venture capital model. And then 20% is going to go to the team. It's kind of like an option pool, but it's for the team that's going to build it out.
So you're implying a valuation of 180 million
Yes.
at launch.
Right. And as a venture capitalist, and I like your quick math, and that's right, because what is the pre-money valuation? I've been shocked at the pre-money valuations of a lot of these tokens being sold. It's outrageous to me because many of them are for theoretical businesses addressing theoretical markets with teams that have no experience. I can say without question, Opskins would not get sold for $180 million. It would be many, many fold bigger than that. We're the biggest player in a $50 billion market. But we are using the tokens and the platform to try to spread both awareness and usage of cryptos in general. I believe there is a need for a consumer mass market application for cryptocurrencies to go from the 5 million people who use them today to the billions of people we want to go to actually make cryptos an important part of everyday commerce. So for us, we look at the valuation of what we've said here and say, that seems like a fairly modest valuation for the fact that Opskins itself is literally porting its business, and I think we are the biggest business so far on the planet that's taken its existing, very attractive, profitable business and said we're going to shift it into a blockchain-based model.
And what's going to make the WAX token increase in value? I mean, if I buy your WAX token, and I'm not a speculator, I'm buying it as an investment.
Obviously, that's something we've thought about, is if people are holding the WAX tokens to help facilitate trading, they don't want to hold a token that collapses in value. Now, in any marketplace, the creator or the issuer can only do so much to manage that problem. But we're pretty smart guys. We've designed tokens in the past. We've built a lot of business in the blockchain space. So I think what we've designed is a system that should satisfy a lot of the problems today with great volatility. One of those, for instance, is that when somebody wants to trade an item on the blockchain, they use what we call a transfer agent. You've got a smart contract, but that smart contract is managed in a way by a transfer agent. For that transfer agent to be allowed to have a role in that process, they have to pledge a certain amount of collateral. Almost like any other real world example where you have an escrow agent. How do you trust them? Well, they've pledged collateral somewhere that's at risk if they don't do what they're supposed to do. The transfer agents have the same type of mechanic in the WAX platform. The transfer agent has to pledge a certain amount of WAX tokens based on the volume the transfer agent is conducting. The more volume that transfer agent does, the more collateral they must acquire, eating into the freely tradable supply of WAX tokens. And as you know, as you create scarcity by buying up the freely tradable tokens, the existing ones tend to go up.
So now I think we've watched the segment and we've learned what investment professionals and how they make decisions as to which tokens they're going to invest in and which tokens they're not going to invest in an environment where there's a lot of hot air, hypes and effectively scams. The decision is up to you guys as to whether you want to invest in waxtoken.com.
So we're at the Money 2020 conference and Perianne has been doing a splendid job of emceeing the entire event. What came out of the ICO talk today? Like, what are the guys looking for? Do they think that the ICOs are in a bubble at the moment?
I wouldn't call it a bubble. I would say there's a huge amount of activity. There's been a lot of success. There's also a lot of noise. There's a lot of hype, so you want to be very careful. But it's an exciting time. And if you have an idea that can be tokened, now is the time to do it because it's all the rage and you will have a massive opportunity to get your idea out there to the world.
But when does it become a bubble?
Are we in a bubble? That's what the community is saying. Where we come in at the chamber is that there's a lot of activity. Some of it good, some of it not great. What would be very helpful is if there were some guidelines, both for technologists, issuers. If you're going to issue a token, what should you be doing? What laws do you need to be aware of? Things like treasury management. So if you plan to raise 10, you raise 230, have a plan of what you're going to do with all of that. Also, if you're going to be a user or a purchaser of these tokens, a customer, and this deals with the retail consumer, so the consumer regulators are very, very careful and paying attention because people can get hurt if they don't understand how to appropriately navigate this.
It's a framework for self-regulation, but what we're seeing more and more is that we can't self-regulate ourselves. It's not working.
Well, at the Chamber, we've launched an initiative called the Token Alliance. We have over 160 token experts who have joined this effort, and we're actively writing best practices today for those three sections, for the technologists, for the users, and for the regulators. And we've had many conversations with many securities regulators around the world, and they're very anxious to see what we want to put forward. We heard on the regulation panel, and we heard from a former prosecutor, a federal prosecutor, who said the government's really weary to just come in and go after one of these big projects, because what if it is successful, and what if people create massive amounts of wealth after that? They don't want to be the government that ruins the opportunity of the next Facebook or the next Google or the next Amazon.
If I were to ask you, how does this thing end 3 or 4 years from now? 3 or 4 years from now, are we going to get draconian government laws, or are we going to get some kind of self-regulation? Where would you put your money?
I believe that the industry will get its act together, will come forward with some industry approach, and that will help in terms of being able to navigate the good from the bad.
I'm under the opinion that a lot of investors are going to get burnt by a bubble, and then we're going to get this draconian type approach. I think only time will tell whether people are sitting more on my side of the fence or your side of the fence. But I want to move to something completely different. So you're nominated as one of the most influential people on the blockchain.
So this is done by CoinDesk, which is one of the media trade publications in this space. So last year I was nominated in this role, and I ended up being the only woman in the entire list. So it was myself, Satoshi Nakamoto, and then a group of men in the blockchain space. What I've done in this industry is very different, and I launched the chamber just over 3 years ago, and I came forward with a very different idea to work on public policy. As a former government employee, I used to work in the U.S. House of Representatives. I've seen firsthand how the government, with a stroke of a pen, can destroy an industry. And I do think regulation is one of the #1 risk to adoption of blockchain. So we've established the chamber to be a organization that's dedicated to promoting the acceptance and use of blockchain and digital assets. And we do that by education and working very closely with the policy community.
So Ran, I saw you pulling in everyone for interviews today to ask them about Bitcoin, blockchain, ICOs, and get their opinions and views. But no one ever stopped to ask you, what did you think, and what do you think of the markets and what's happening? So what did you see today at Coin Agenda that was interesting?
My biggest takeout is that the industry is still in its infancy. And we're at the point where no one knows what's going to happen in this industry. We know we have a good technology. We know the technology solves a lot of the world's problems quite logically, but we don't know how to monetize it and how to model it, etc., etc. So I think we're really in the beginning of an industry, and I think there are no financial pricing models yet in this industry. I think that any financial pricing that we see is purely speculative at the moment. And speculative, I'm not sure if speculative means too high or too low, because no one knows how to price this whole thing. We're going to see a flood of money that makes the 180 billion that we've already got in crypto look tiny. So I think that we are in the beginning of crypto. I think the next wave of money is the institutional money. I'm not sure when the institutional money is going to come, but I can tell you that when it does come, it's going to make what we have here today look like Las Vegas.
Do you think we're at the point where a reputable institution is willing to take the bet?
They're not going to go all in, but they may dabble in crypto. And I think for them, if they dabble in crypto, when you talk about all the trillions of dollars that they manage, if they just dabble in crypto, it's going to double, quadruple, and maybe even 10x the crypto market. And I think that's why it's probably a good time now to start buying crypto.
Well, it certainly is an exciting time in the market for both the entrepreneurs trying to solve the problems you outlined and the funds looking at whether this is a new asset class that they're going to go behind. So I just look forward to what's going to happen and time will tell.
It's an exciting time for us as well, because we're just about to hit the Vegas town.
Cryptotrader is proudly brought to you by Element, a full-service investment bank for the digital token capital markets.